Back to work, back to work, back to work. Hope you guys and gals had a fantastic session out there. Happy Wacky Wednesday to you. Happy Hump Day to you. But it's time to get back to work tonight, Wednesday evening, August the 12th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Thursday, maybe Thirsty Thursdays trading session. And I got a great video in store for you guys and gals tonight. Charts are already in the background, as you can see. Got the E-minis, we got the gold, and of course we got the oil. Got a lot of great setups we're tracking for tomorrow. Got some big spikes into some small ranges. That means pullbacks, that means breakouts, that means failures, that means momentum's going to play a big key for tomorrow. Boy, I can't wait to get this video growing here this evening. Before we jump in though and put the plan together for tomorrow's trade setups, I just want to make sure to remind you guys, subscribe to this YouTube channel. If you haven't done so already, hit that red subscribe button below me here tonight and get subscribed. That way you don't miss all the good stuff on this video. Don't forget, if you have any questions for me tonight, any questions at all, drop those questions in the comment section below. I'll get them answered as soon as we publish this video later on this afternoon. And as always, I really appreciate you guys tuning in every evening. If you're like me and you rely on this video to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys tuning in, subscribing, dropping those questions if you got them, and thumbs up if you guys love the content we publish every evening on this video newsletter. But speaking of the newsletter, let's get to the chase here tonight. Lots of spike and ranges on the charts. We're going to break that down in a moment, but I'm going to start first tonight with the calendar for tomorrow. We got some rollover, we got some news, we got maybe some stimulus. We'll see. Tomorrow, of course, is a Thursday trading session, Thursday, August the 13th. Boy, we missed it by one day, right? I don't think any superstition about Thursday the 13th, is there? So we missed it by, right, tomorrow will probably be a pretty good day because of that. What do we know about tomorrow? Thursday morning, August the 13th. What do we have here on our schedule? Well, a couple things here right now. First of all, the big news for tomorrow is that jobless claims report at 8:30 Eastern time. So we know that's the big news of the session tomorrow. And remember, it's going to be a bad number. It's going to be a really, really bad number. The question is, will it be as bad as they were expecting? Will it be as bad as it was last time, right? Last Thursday morning, right? So don't let that big negative whatever million number shock you tomorrow into thinking that's a bad number, right? It will be if it's not as bad as they were expecting. So that's going to be the big news tomorrow morning at 8:30 Eastern time. So you definitely want to make sure you're at your desk early tomorrow morning, right, to catch that wave off the 8:30 reaction. We also, of course, are still waiting more for stimulus. It definitely sounds like there's some politics going on right now, back and forth here at the White House. Shocker, right? I'm sure you're surprised to hear that, but it does sound like there's some politics going on right now between both sides of the aisle, trying to kind of posture and look better in the media right now, and it looks like that might be holding up that stimulus here today. The last time we heard this afternoon, it sounded like I believe the quote was miles away, right, from that stimulus agreement. I think we're all tuning in right now to see when that next announcement will come out. That is definitely a known unknown for tomorrow. The rescue plan is something we haven't heard about all week. That is something we're waiting for. Rescue plan for the airlines, right? The don't call it a bailout rescue plan, right, for the airlines, right? That's something we're waiting on tomorrow. We got some rollover I'm watching on oil. Probably not tomorrow, but maybe Friday, right? Friday, maybe next Monday. So just keep an eye on that. If you're an oil trader like we are in our trade room, be aware of that on the, I believe it's the 1020 contract. We'll take a look at that here in a moment on the video. So stimulus for tomorrow. Will we get some stimuli tomorrow? Will they announce more about this rescue package? And that rescue package, again, for the airlines, I'm thinking Dow, I'm thinking S&P, I'm thinking oil, right? Pretty much anything that, is remotely revolving around the airline industry, definitely going to be something on our radar tomorrow. And rollover for oil, right? Probably not tomorrow, but think about rollover on Fridays. Just keep that in the back of your mind. So big news tomorrow, right, is the jobless claims report at 8:30. stimulus rescue package, right, and the rollover are on our radar as we go into tomorrow's trading session. I should also remind you, too, we'll be in our trade room tomorrow at 8 o'clock Eastern Time, like we are every morning. I'd love to have you there with me. I'll put all of the membership links you need to get registered for tomorrow morning's trade room. I'll put that right in the description of the YouTube video here tonight. So grab that link in the description, get registered, and come out and trade this stuff with me tomorrow as the whole day develops. It's no easier way to learn and master this strategy than doing it with me. So grab that link in the description, get registered for tomorrow morning's trade room, and I'll see you guys there. We'll have a front row seat for that jobless claims report. I also want to make sure to remind you too, I'm going to be I'll be in the office all next week. We'll be running our trade room as normal, but I will not be publishing the newsletter next week. Got some housekeeping stuff. It's third week of the month of August, so be aware of that. There'll be no newsletter next week, but rest assured, I'll be kicking butt with all of our clients every day next week in the morning session from 8 o'clock, right, to lunch like we do, right, always. So please be aware of that. I hate to leave you guys hanging next week on that, but third week of the month, I got some housekeeping issues. I'm working on some new stuff here for School of Trade clients. And of course, every once in a while, we take a little break from that newsletter. Again, don't forget, I will still be with all of our clients in the trade room next week. So I'll still be here next week. It's just there'll be no newsletter, right, for us being published, so I can work my fingers to the bone on some new stuff for you guys coming out here later on in the year. All right, let's jump into some charts here, shall we? Lot to cover here tonight. Most of this, though, is going to revolve around a spike in range. Now, we talk about these quite a bit, but in case this is your first time right here today, when it comes to a spike in range, that is a bull market up, right, strong move up, into some sort of trading range. Now, the first thing you want to do whenever you see a spike into a range like this is remember there are two basic ways to trade it. One is to buy underneath the range, and we use what are called failure patterns. They look like the letter W in a bull market. The other one is going to be a breakout above the high, right? And there are two basic types of breakouts. You may recall these. They are 1, 2, 3 breakout patterns, and they are 2 try trap breakout patterns, right? Those are the kind of the two main types of trades we're looking for on a spike and range pattern. Either we're looking for basically what is a seller failure pattern below the range, or we're looking for a bull breakout pattern, right, as we go above the range. The key is going to be to avoid the middle and look for ways to buy, again, with those failure patterns underneath, or, right, trade those breakout patterns as we go higher. So that's the basic idea of what the plan is going to look like for most of these markets here tomorrow. So now that you know the basic idea of that, let's jump right into the charts here now. I've got my S&P, my oil, my gold. Now, gold has a beautiful pendulum swing going on right now. Momentum is going to be a really big factor on gold. On the oil, I think we might have a chance for a nice little aggressive scalp off the high here. We might be able to grab this thing going higher before we get this deep pullback on the oil. We definitely have a strong move up there. I'm going to go into more details on that here in a moment here. But let's start off with the narrowest of the bunch, probably the smallest range you're going to see on the S&P here. I mean, look at the size of this range. It's very, very small. And you'll notice here, we've got a bull market up, and we got a move going sideways, right, into a trading range. Now, again, we call these, right, bullish, right, spike and ranges, right? So there's your trading range. Now, we talked about this in kind of the preview of this, right? We're looking to buy underneath using those, again, what I call failure patterns, right, which kind of look like a letter W, or we're looking for breakout patterns as we go through, right? 1, 2, 3 breakouts, or 2 try trap breakouts, right? Those are the three, or the two basic ideas, right? Buy underneath or buy the breakout higher. Now, the first thing we notice on this particular chart is how just darn skinny that little range is, right? I mean, it's very, very tiny. Now, whenever I see a small, narrow range, I always think deep, deep pullback. And it's very, very consistent. When I have a wide range, I can look for a shallow pullback. When I have a narrow range, like you're seeing right in front of you, right, I'm looking for a very deep pullback. Why? Why is that? It has a lot to do with risk reward, right? If I have a very wide trading range, I don't really need to get a very deep pullback to get that failure pattern, to get a good risk small to earn large trade, right? If I have a very small little trading range, right? Well, now here's the problem, right? I can't get aggressive with a shallow pullback there. I can't risk small to earn large, right? I've got to get that deeper pullback, get those failures, and go up from there. Hopefully that makes sense, right? That's kind of the simplest way to describe why when I see a narrow range, I need a deeper pullback. It has everything to do with just simply professionals who are stingy, right, with their entries. Professional traders are not going to want to buy really aggressively in a narrow range because there's no meat on the bone, right? There's no cherry on top for them. There's no big profit to earn here. So once we see that narrow range, I start looking for areas of support that are relatively deep pullbacks. And my eyes immediately gravitate over here because you've got some overlapping candlesticks. Anywhere you see overlapping candlesticks, you know there's probably going to be a lot of volume that traded hands right there. And that'll make for a really nice area to kind of reload here on that pullback. So if I had it my way, I would get this nice deep pullback here, free up some space so I can get that, that good risk reward ratio that we talked about, and then back up to retest the high. So that would kind of be, that's the first thing that comes to mind. We know we're bullish. We know we have a range. It's just a very tight range. I'd like to see a nice deep pullback. Now, we're bullish, so really what my job is to find support levels, right, underneath the range. Again, I like this 3360 area. That's a great support level. But I also want to bring your attention to this one too, that 65 and a quarter, and of course that trend line, which creates kind of like another buy zone, another battle zone for us here. So it's kind of interesting because it really all depends on, we can buy both of these, but it really all depends on the type of pullback that we get. So again, I want to buy underneath this trading range. But if I get a shallow pullback, for example, right? Let's say we go down into that, right, into that first buy zone down here. The minimum criteria, I would say, would be at least getting, I would say a double bottom at 65 and a quarter, right? Probably the worst case scenario here. The best case scenario would be getting down to that trend line, right? That would really be kind of ideal for a shallow pullback. Now, the hard part about a shallow pullback is that I'm buying relatively high. Would you agree? Right? What's my concern? My concern is there's resistance right over there, right? That is resistance atop of that trading range. So I definitely like the idea of buying at support underneath this range because we're bullish, and the range, keep in mind, will act as a magnet, right? Because that's where all the volume was traded today. The problem is, though, with this shallow pullback, knowing the situation, knowing that we have a narrow range, knowing that we're not going to be able to get a good risk-reward ratio, I have to start looking for more conservative entry patterns on a shallow pullback. And my favorite entry pattern on a shallow pullback, you guys probably know, are traps. Right? So 1 try for the bear, 2 try for the bear, and a trap low. Trap patterns are always the go-to pattern whenever I'm worried about buying into resistance, right? Now, think about trap patterns are great because they allow you to buy nice and low. That's one setup I'm watching for here for tomorrow. And again, it'll look like it pulls back. The buyers or the bears try once to sell, right? The bears try twice to sell, if I can say that 10 times fast. And then again, trap low below that low. Very, very simple pattern, but again, just need to get a trap because of that really narrow channel. Now, if we do get that drop, right? If we do get that drop, you'll notice I've got this measurement off the high. The pendulum swing really looks great right there. I really like this area. If we do get the drop and we kind of hold on this 3360 area, now I'm not so worried about that risk reward ratio now, but I do have to worry about the bears, right? I do have to worry about those bears coming in right now, right? They're definitely going to try to sell off of this moving average, and they might be successful for all I know, I never like to try to pick a bottom. I like to wait for the bears to go in and try to sell off the EMA. Once I see them get short, then I know exactly where their stops are, and I can buy into those stops with, again, there's that W pattern, right? There's that failure pattern that we talked about before. Does that make sense, right? I never try to pick a bottom like this, because what will happen is the minute I buy that bottom is the minute it comes up, they run me out and then they go right back up, right? That's exactly what happens. The minute I sell, right? The minute I buy that dip is the minute this thing rolls right over, stops me out, and then rips higher, right? Isn't that the truth? It's almost like the markets know once you buy that dip, right? So what I do is, to avoid that little trap and run, that stop and run, I wait for the bears to get short. That way there's no doubt in my mind, if they fail, I can buy right into those stop losses and hopefully get a nice, strong, short covering rally all the way back up to the other side of this triangle that I've drawn out. Now, a lot of times, I'll be honest, these things will reverse into what's called a 1, 2, 3 reversal, right? 1, 2, 3 reversal. And you can grab a trend line off the high, off the low, and you can buy that pullback. Now, obviously, you want to get that pullback before you get back up to these highs, but those are two really easy setups you can watch here as we get that big, deep pullback. Now, speaking of deep pullback, if the market really takes a dive, because again, it could easily pull back all the way down to that 33.50 area. That wouldn't surprise me totally, just because we are at, right, that high from yesterday. So it wouldn't surprise me, right? It wouldn't surprise me if we saw a much deeper pullback. If it really cooks, right, if we don't see it hold off the pendulum swing, now I'm a lot more worried about the sellers now, right? Now that momentum is a lot stronger. And so now I'll start looking for what I call a nested variation of that failure pattern. Remember, if we can get a deep pullback, what I'll do is I'll look to buy into the stops of those sellers. But if it really pulls back, now what I'll do is I'll let the sellers try twice on the pullback. I'll let them try once. I'll let them try twice. And once I have those bears, right, committing off twice now, now again, I'm not trying to pick a bottom on this. I'm trying to let those sellers commit. And then once they commit, use those stop losses to fuel the move back up into the range and then back up to the other side. And again, as I mentioned before, don't be surprised if this thing goes 1, 2, 3 launches. You can mark up that high, mark up that low, and grab that pullback before we get back to the other side of the market, right? The other side of that range here. So those are some definite setups I'm watching for on the pullback. It's the trap, it's the failure, and it's the nested, right? Now, believe it or not, we cover all three of those entry patterns in our free trading classes, right? You don't even have to be a member to learn all those patterns. What I'll do is I'll put a link for you in the upper right-hand corner. Grab that link, pause the video if you need to, grab that link, get registered for the free trading course, because in the free course, I cover all the traps, all the failures, all the nesteds, pretty much everything I'm talking about here tonight. You'll get a deep dive into those setups, as well as I'll send you hundreds of examples of how we apply those setups to our favorite futures markets. So grab that free trading course. And again, right, if you want to skip the free course and come out and do it with me, right, I'll put all the important links for you guys in the description of this YouTube video. All right. So now we're going to put a good plan on how we want to trade the pullback. If the market goes sideways here, we do nothing, right? We don't want to do anything if the market runs sideways. We talked about a breakout pattern, right? What was the breakout pattern that we talked about? There were two breakout patterns. Remember what they were? We talked about them earlier this week. One of them is called a 1, 2, 3 breakout. This one's the most reliable, and we saw a bunch of them early in the market today. Strong move up, pull back, and strong jump off. Okay, it's called a 1, 2, 3 breakout. Okay, these are also called 1, 2, 3 reversals, right? This is the exact same thing. If you watch last night's newsletter, right? We talked about last night. If the market reverses, 1, 2, 3, right? What do? You mark up that high, right? You mark up that low, and you buy what? The first test, right? Off the low of that channel, right? Same idea if you were here last night with what we call a 1, 2, 3 reversal. So 1, 2, 3 reversal. I call it a 1, 2, 3 breakout in this scenario. Strong move up, hold the pullback, give me a nice good jump, mark up that high, mark up that low. First test is always the best test off the low of that new hidden channel, right? That's one of my favorite breakout patterns. Another breakout pattern is called a two try breakout. This one starts off with a really strong move higher. That's the key. It's going to be a really strong move higher. Then what you want to look for is a shallow pullback, a higher high, and then look for that trap below that low. Now remember, this one really has to start with a strong move. If you're not starting with a strong move, right, like this one back here, that would not be a strong enough move for me to take, right? It needs to be very strong, right? It needs to be a blow your hair back, whoa, that's a big move type of strength on that move higher. Then it's that shallow pullback that really is where that's the giveaway, right? Like back here, right? Like back here, over in this situation, right? Strong move up, little shallow pullback, higher high, trap low. Right? That is the pattern. That is exactly, I might add, right? The pattern you're looking for. Very strong move, right? Really strong move. It feels like it's never going to stop. Shallow pullback, right? Barely scrapes the moving average, right? Barely scrapes the moving average. Shallow pullback holds, higher high, not incredibly higher high, just a little higher high, and now the FOMO, right, kicks in right there. So same pattern, right? Strong move up, shallow pullback, higher high, trap low. Again, I always joke around with you guys by saying you really should call this the FOMO trade, because that's what it is, right? The buyers who want to buy the pullback, they don't get in. They wait for the next one. That one they hit, right? Those are the two breakout patterns I'm looking for. And again, those breakout patterns, I cover those inside that free trading course, right? If I can convince you more, right? Because it's definitely worth your time. Now, last but not least, how do we sell this market? Can we sell this guy? Well, it's a very strong bull market. And in all reality, there's a little bit more left to go overhead up at that 33.90. That'd be 4 legs up off of the big low, right? The pandemic low, if you will, right? That's a big measured move there at 33.90. So I'm not quite convinced this market is done just yet, but like I mentioned last night on last night's newsletter, I'll trade what I see, not what I think, right? So my thought or my assumption or my gut feeling really is irrelevant for tomorrow. What do we know right now? We know we're bullish, and we know we're not bearish. So for me to want to sell this, I'm going to have to see a full-blown reversal. So we're going to use that same 1, 2, 3 move, but now going in the opposite direction. First, strong move down. Second, pull back off the moving average. Third, strong jump off of it, right? That's the key. Now, if we just pull back here, that's where you start looking for failures going back up. But if they run lower, right, and they pull back, and they hold and they jump off the moving average, that 1, 2, 3 move, right? That 1, that 2, and that 3, that confirms the reversal. It also confirms a breakout. Now, what do? Do you chase it down here? No, we don't want to sell low. We want to mark up that low. We want to find that new high, right? That hidden channel high. And now the first test is the best test to sell off the high of that channel. I'm not trying to sell that first pullback, right? That first pullback's not going to be easy to get short because it's not a bear market yet. It will be a bear market once they hold that pullback, and that's why this one is much more reliable. And when it comes to day trading, it's all about reliability. Target for those sellers, you guessed it, is all the way back down to retest, right? To retest today's lows. It could easily happen, right? Big move down, big move back up. Sure, why not? I have no problem being a seller, but I can't try to pick a top in a bull market. Not a bull market this strong here, at least not until we see more proof. All right, we're looking good. So S&P, I think, is pretty clear. Again, a lot of this has to do with how deep is that pullback? Will they hold the pullback and turn this thing into a bear market? Those are the questions on my radar for tomorrow. Now, how about some oil? Now, don't forget, we are watching rollover right now on the oil market. As I'm recording this right now, you've got the CL 920 contract with the bulk of the volume right now, right? 360,000 contracts traded. You'll notice, though, that 1020 contract has 179. So tomorrow might be a relatively low volume day as they may balance each other out, right? So, you might see 250,000 on the 920 and 250,000 on the 1020. Once that 1020 contract has more volume tomorrow, guys, or Friday probably not tomorrow. Might be tomorrow though. I've seen stranger things. Probably not tomorrow though. But if it was, right, we'd make the move over to the 10-20 contract. So just keep that in mind. Again, probably not going to be the case for tomorrow, but we do want to make sure, right, we're aware of that. Now, over on the oil, I'll tell you, oil has a pretty interesting setup going on right now because the strength of that last leg up, right. So I put that little note on there, right. Strength. Now, this one's not as clear as a range, but I do think it is a bull market into a trading range. You'll notice I've marked up 1, 2, 3 legs higher here. Let me get those off of here just so you're not too confused. But I did want to make sure for the folks who are reading this on the blog and using that chart, I did want to make sure I put that on there so you guys know where that is. And again, the biggest clue I see right now is the strength of this last move, right? That strength, remember, anytime you have a strong move in one direction, you're almost always going to get a retest of the high or retest the low, right? Whatever direction it is. Anytime we see a strong move in one direction, the odds are very good we're going to at least go back and retest the high. If not, go all the way up to a measured move, right? So when I see a strong move like this, I have to think there's a good chance they're going to keep this thing going. Right? Now, obviously, I'm concerned up here because we're only an inch away from that high. So I definitely have some concerns up there, but I'm interested. And I think with the right entry setup, which you can probably already guess which pattern, we just talked about it, right? What's my favorite entry pattern? What's the best pattern, best entry setup to avoid buying high, to avoid buying into resistance? They're traps, right? So trap, of course, the shallow pullback. And then just like I mentioned before, right? There's my range, right? The range is the magnet. You want to stay out of the range and basically buy low, sell high, right? So sell high, buy low. It's a very bull market right now, so buying low is probably going to be the better idea here right now. And again, I'll look for a little buy setup here above these highs as well. We're a bull market. I want to buy underneath the range, right? Remember that from earlier? Look for those failure patterns, right? Those W patterns underneath, or that 1, 2, 3 breakout. Remember breakouts or 2 try trap breakouts, right? Those, again, we're still looking for pretty much those same basic setups here for tomorrow. You'll notice I really like this triangle, right? We see an example of that triangle on gold right now, or on the E-mini right now, right? This will be great to use that triangle tomorrow. Boy, that would really be, if I had it my way, that would really be where we get the best entry setup, right? Off the low of that expanding triangle. I've also got, as you can notice here, I've also drawn off the highs here, and I've got this channel here. Now, this is kind of interesting because, with that big, strong move up, if we get a shallow pullback here, I would be interested in a trap, right, to buy off of that low, just because, again, we have that big bullish move higher. So you can kind of already see what my plan is for tomorrow. So we know we are very bullish. We know we have a range right there. I want to stay away from that trading range. On a shallow pullback, right? Let me kind of zoom in a little bit closer on this so we can get a little more intimate on the oil, right? On a shallow pullback here now. Again, I mentioned this earlier. I like the strength of this market, and I'm definitely willing to be a buyer up here. However, I need to see 1 try for the bears, 2 try for the bears. It's not so much 2 tries. I just need to see a trap. That's what I need. I need to be able to, well, first of all, you have to assume, at least we have to assume in this case, that buyers are taking profit, right? So that's going to be a pullback. And we have to assume, too, that sellers will likely see that unsuccessful test of 94, and they'll try to sell this. So it's a good idea to let the bears try a couple times here. But the most important thing is I want a trap. I want that trap entry because that trap entry will allow me to what? to avoid buying too high, right? It's the most effective way to buy nice and low, right? And that's what I'm worried about up here. So a shallow pullback. Now remember, I'm only looking for a shallow entry right now because of the strength of that last move, right? That's the only reason why, right? It's the only time I'd be aggressive like that is when there's an open loop, right, that has to be filled, as I said last night on the nightly newsletter, right? So if we go back into the range, right, we do nothing. Now, if we pull back to the low of this channel, right, I like the channel. I like it a lot. But here's my concern. My concern is we're going to be right back in that range. And oftentimes what happens is you get these failure patterns and they trigger inside the range and they kick out on you. And so I don't want to be taking those entries inside the range because they oftentimes kick out and then they end up going higher. So that's a very good clue as far as what I'm looking for tomorrow. If we get down to that channel, again, we're not getting that really nice deep pullback that I want, but if we get down to that channel low and I start seeing the bears, right, they're trying once, I'm going to let them try twice, and I will definitely be looking for, after 2 tries from the bears, almost the same pattern, right? This is almost the exact same pattern here as that shallow pullback pattern that I mentioned earlier. And again, without being redundant, the issue I'm having here is I don't want to trade the range, right? And because we see a lot of those kickouts from inside the range there, right, I do want to get that trap, right? That is another kind of shallow pullback here. Now, as we roll lower, right? Let's just say now we actually make the full rotation, right? We make that full rotation all the way back down to that low. Now what do we do, right? Now what do we do? Well, it really has a lot to do with how the market gets there. You know, for example, if we run straight down, right? If this thing opens up in Asia and we just see chunk, right? If it runs straight down at me here, that is a hell of a lot of bear momentum. And because of that, I will look for that 1 try, that 2 try, and back up from there. But if all we get is a move back into the range and we stumble around for a while, right, then we make that move lower, I'm on, right? I'm in, right? That's good. Now I can look for those bears to come in, let them try to get short off the moving average. I can look for a buy into those stops. And I can also, you know, I always like to look for that pullback off the moving average. Okay, that's an option if you can get in below the range. You can't always get in below the range. Sometimes what happens is the market will really jump. And again, we call these failure patterns, right? We wait for the price to pull back below the range, at a level of support. We look for the bears to try to get short off the moving average, and we buy into those stop losses. Sometimes, though, sometimes the pullback happens right in the worst possible spot, right? And that's the hard part about that is, again, you don't want to trade inside the middle of the range. So in those situations, what we want to do is, if we do end up pulling back, right, a little bit later, watch that jump, because then that's that 1, 2, 3 move. And like I always say, guys, it almost doesn't even matter where you are in the chart, because that momentum swinging like that, mark up that high, mark up that low, first test is the best test, right, off the low of that channel, right? So again, if we can get that thing to whip as we go, keep your eyes on the other side of that big expanding triangle. That would be a prime time setup tomorrow if we can get that nice deep pullback, right? That bear failure, either into the pullback off the moving average or the 1, 2, 3 reversal, right? And then the pullback off, right, the low of that channel, depending on where that bad boy sets up. All right, so that's some definite food for thought as we get prepped up for that pullback. Now, you might also see this too, if the market was to just explode higher here, right? If we get a nice strong run higher here, let's do this, right? Let's go. Mark up that high, mark up that low, looking to buy the first pullback off of that channel. I definitely want to make sure this thing really jumps, right? So mark up that high, mark up that low, find that hidden channel. First test is the best test, right? 1, 2, 3 breakout pattern, right? That's one easy one. Or maybe we simply rip, right? We race higher here, big green candles. We see that shallow pullback, that higher high, that trap low, right? And keep in mind too, that pattern may set up right in combination with, let's say for example, we rip higher here now, moving average comes over, shallow pullback, higher high in price, right? What do? Trap low. But look, you could probably also combine that now with that bingo. I mean, wouldn't that be the creme de la creme, right? That would be an incredible setup if we can get that for tomorrow. Again, it all starts with that strong move, though, right? It all starts with that strong move off of that or through that high. Now, where would those breakout buyers be trying to go? They'd be trying to go up to the next level up here, 43.52, and then from there, it's all the way almost to 45 because that's the kind of it's the gap, the low of the gap of the pandemic gap down. Right, a few months ago. So 43.52, we have to assume is the next objective, and then from there, it's 44, and really it's almost all the way up to 45 from there. So those are some big milestones for those bulls. So I think we got a pretty good plan here now for the breakouts and the pullbacks. Reversal, anybody? Shall we get ready for a short? Now, you'll notice here, right, very strong move higher. So with that strong move higher, I don't really get into selling against those moves. You know, there's an open loop up there, and those buyers are going to want to fill. They're going to close the loop, right? They are. So trying to sell right now, probably not the best time to be selling. Now, if they were to close that loop and then give me one, give me two, and give me what I call a crown reversal pattern, okay, all right, I'd be open-minded to that, right? So they retest the high. They don't blow through it, right, for a breakout pattern. But now as they pull back, the buyers try to keep it going. They see a lower high. They go, oh, crap, that's not good. Let's try again, right? Lower prices. Remember, buyers always want to buy low. Buyers always want to buy low. Sellers always want to sell high, right? So bulls try once, bulls try twice. Again, that would be a scenario to consider, but it's only after they close the loop, right, as we say in our trade room. Or what's a reversal look like? The reversal's pretty easy, right? I want to see a strong move down. I've really got to get into this area, right? Got to get into this area here. Then get that moving average coming over. Hold that pullback now. Prove it to me. Because if you can't, I'm going to buy into those stops, right? If you can't, we're going to buy into those stops. Hold that pullback, right? And run from there. Then mark up that low. Mark up that high. First test is the best test always, right? And where's my target? Yeah, back down to retest those lows. All right, guys. Now, obviously, there'll be some other nuances to this, and we'll go over more of that tomorrow once we know more information in the trade room. So make sure, again, right, if you haven't done so yet, grab all the links I have in the description of the YouTube video. Get registered for tomorrow morning's trade room, or grab that free trading class, again, linked up in the upper right-hand corner. That way tomorrow night, when we come back tomorrow night and I talk about nested failures or trap failures or breakout patterns, you'll know exactly what I'm talking about. All right, how about some gold here? Wrapping things up here on the yellow metal. All right, the free fall appears to be over here for now, right? So I guess the brick wasn't exactly a full brick. Maybe it was a bit of a sponge, if you can take the joke. Let's see here. What do we have here? Oh, it's a spike in range. Shocker, right? It's a spike in range. This has been the month of spike in ranges here, the month of August. Get a very strong move higher. Anytime we see that much strength in one direction, what do you expect? There's a big bullseye where right back up to retest the high, right? We just talked about that, right? We talked about this, right? Think of that being almost like an open loop, if you want, right? Or it's, call it whatever you want, right? I think of it as it makes the buyers go, okay, buy, keep buying, keep buying. They're going to keep on buying until they reach that high. They got their high, and look what happened. Yeah, profit taking. Are we surprised? Definitely not, right? Definitely not. So buyers are waiting for that retest the high. They take their profit, and boy, oh boy, did this thing collapse right back down. Now, what I thought was really interesting about this move lower, was if you look right back at the opening price from today, look at where the day ended. Pretty much right where it began. Isn't that incredible? Pretty incredible, huh? It's also almost symmetrical the way it went down and went back up again. So pretty interesting stuff how the symmetry on that stuff works on these charts. Now, again, it's a bull market. It's into a trading range. So we're looking for the same basic ideas, right? We want to be what? We're looking for those failure patterns underneath. Okay, that's pretty straightforward, I think. And if we go higher, we look for what? Those breakout patterns, right? Those breakout patterns, those 1, 2, 3 breakouts, right? Or those 2 try trap breakouts, right? These three basic strategy ideas for tomorrow. Now you probably noticed something about this range. What do you notice about this particular range, right? This range looks what? It looks relatively narrow. Now, how would you know this is relatively narrow? Well, experience definitely comes into play. How do you know what a narrow range looks like? Do this every day for a while with me, and you'll begin to see this is a relatively narrow range. What does a relatively narrow range tell me to do? Wait for a deep pullback, right? Because of, yes, the risk-reward ratio. Also, to this one more big clue on this chart, and it's right there. What is that? That's a strong move down. So what does a strong move tell me? Oh yeah, right, open loop again, right? So we're going to expect another leg in the same direction. So you see that works, right? The bulls take a strong move higher, expect a retest, right? The bears make a strong move lower, expect a retest. Okay, so you're getting the fundamentals here now. I think I can see a light bulb. I think I can see a light bulb or two going off for the folks watching this video here tonight. If you got that same light bulb moment, how about a thumbs up? Hashtag light bulb moment right in the comment section below. Hashtag still here. You guys are great. Thank you so much for coming in here and watching tonight and watching all the way to the end of this video too, all the way here. All right, so we know the basic idea, right? Buy low, sell high, avoid the middle. I got my buy zones, right? I don't want to trade inside the middle. I really like how we have this trend line here, right? Beautiful support area. I've got the pendulum swing. Gorgeous spot here right now. It's a great spot to be a buyer. But what's the problem? Momentum. The problem is I have all of this momentum and I don't want to mess with it. At least not until they get that retest. So there's a couple things you want to think about, right? Here's two patterns I'm watching for. One of them is that classic nested, right? That one, that two. Now, let's talk a little more detail on this one, because for example, if the nested goes like this, right? If it goes like this, I'm not going to want to take that inside, right? I'm not going to want to do it there, right? Can we all agree on that one, right? So if we see the bears try twice here, that's not going to be a good spot to be buying, right? You're inside the middle of that range here. If it really, what I want to see the bears try once, try twice, and go back in. That's what I want, right? I want those bears getting short so I can still be a buyer into those stop losses and rip this thing back in the other direction, right? Other side of the range. And then, of course, we'll probably have like some trend line like that, right? Up overhead as that final objective for the runner. That would be one very easy way to trade this right now. Bears try twice, buy into those stop losses. But again, if this market was to, for example, let's go up one and then two, see, that's not going to work now, right? So in those situations, you want to wait for what? A trap. See how we stack all this stuff together now? Right? It's a nested, but because of the way it pulls back, it's a trap low. Why trap low? Because I don't want to trade inside the range. And what's the best pattern to avoid buying high, which in this case, that's exactly what you'd be doing, buying high? It's a trap. So there's a little bit of nuance to this on a nested failure, right? Now, another thing to keep in mind would be if this thing rolls over and gets that next leg. Right? If it rolls over and gets that next leg, right? Just like we pushed higher, got that one, right? And then came back down again. Same thing. We go over. We have a strong move down, right? We come back in. We hold the moving average. Now, we're not running, right? This is not a reversal we're talking about. It's not a breakout. It's not a 1, 2, 3 breakout. If it was, we'd what? We'd mark up that low, mark up that high, right? First test is the best test, right? That's the way you trade that. See how it all comes together here, right, at the end of this video here right now. Most important thing, though, is if they get that next leg lower, right? Now what I'll do is in these scenarios is I'll now go to a faster time frame. I don't trade off the 2,500 tick chart. I'm sure you probably have already assumed that, right? I'm over on a 377 tick, a 618 tick, an 800 tick chart, depending on the overnight volume. Once I get those bears trying once, trying twice, that momentum is still a factor. So now I can get the 1, 2, right? And I can look for the buy up from there, or I wait for it to pop up, 1, 2, little trap, and go from there, right? So it's gonna that's that's the way I'm going to trade this if they hold it and go. The key is going to be on a faster time frame, looking for bears trying once, trying twice, and then back up into that range. So definitely a time tomorrow where it might be good to be with me tomorrow morning in the trade room to really try to learn these nuances, because this is all about momentum. It really is, right? It's all momentum. If it holds and really runs over, now it's 1, 2, and go from there, because that follow-up leg is not incredibly strong, but it's still very bearish at that point, right? It's still very bearish. So again, in these situations, 1, 2, trend line up, right? There's your buy going back up into that trading range. All right, guys, so those are some things I'm looking for here as we get this long, right, off the low of this channel. And again, if it holds the pullback here and rolls lower, good for them. Mark up that low, mark up that high, go bears go, right? And we're selling the first test off the high of that channel. That makes sense? Okay, all comes together here. Now, what if we just roll right back forward here, right? Well, think about that. How do we buy as it goes higher? There's two ways to look at this. One would be to go back into the range and we get sideways. If we go back into the range and get sideways now I have to wait for that 1, 2, 3 breakout, right? Mark up that high, mark up that low, and buy the first pullback off of that low. Or, right, it's a 2 try trap, insert whatever pattern we get up there, right? 2 try trap, right? 1, 2, 3 breakout. And again, the assumption is we sit inside that range for a while. But I'll tell you right now, if the market makes a strong run, if it holds that pullback and it blasts, okay, that will be enough momentum to carry this thing possibly all the way back to 2000 tomorrow. Mark up that high, mark up that low, right? And we're buying that pullback. So again, there is going to be a little bit of nuance to this as it turns off of that low. So keep that in mind as well. The big question will be if we do just V bottom off this and go into the range, then that kind of chills everything out for a while. Then we got to see the strong 1, 2, 3 from there. But if it doesn't, right? If we just rip right through the range, like what range, right? I didn't see a range back there. The market ignores the range, pulls back and launches. Bingo. That's your reversal. That's also your breakout. And now we know exactly where to look for the next entry, right? Target, of course, I would assume is up to that round number at 2,000. Easy come, easy go. All right, I think we're looking pretty good here. We've got the idea for the nested. The biggest problem right now is momentum. Love the pattern. I love the area, right? Really love this area in the buy zone, off a trend line. Just give me something I can trust, right? Give me a 1. Right? Give me a 1, give me a 2, give me off that trend line so we can buy that sucker up, right? Give me a shallow pullback, a higher high and a trap low, right? I don't care. Just give me something where I can give the bears a couple shots to get short that I can buy underneath that range as close to these lows, right, as possible without inside the range. Target off of the highs, target off at the retest, and we're off the races there for tomorrow. So will the bears hold this pullback, right, and make a run possibly back down to that low at 1874? Will they fail and this thing rip to that 2000? Will we sit inside the middle of this range and really test our patience? Only time will tell on this. Isn't that right? So gold is locked and loaded. We got the oil. Keep your eyes on the rollover, on the E-mini, right? Get those deep pullbacks, that skinny range. We got to feed that sucker more around here, right? I'm kidding with you. All right, don't forget, guys, make sure you get registered for tomorrow morning's trade room. We'll be in the trade room tomorrow morning at 8 o'clock Eastern Time. Again, you can grab all the links you need there in the description of this YouTube video, or I'll put a big button for you guys below the video tonight on the trading blog. Do not be afraid. Please don't be afraid to call the office. I'm always here if you have any questions. I can always use live support chat as well. We got a great little chat feature here right on the homepage of the website, so don't be afraid to chat with me there. I'd love to answer all your questions, so call the office or chat or email, right? Whatever it takes to get you guys the information to get you on the right track. As always, my name is Joseph. Hope I'll see you guys tomorrow morning at the opening bell in the trade room as a member. If not, come back and see me tomorrow night, right? Thursday evening is right around the corner. Be back tomorrow night for the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.